Ladies and gentlemen, good day and welcome to the J. Kumar Infraprojects Q4 FY22 and full year FY22 conference call hosted by Anand Rathi Share and Stock Brokers Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Meet Parekh from Anand Rathi Share and Stock Brokers Limited. Thank you and over to you, sir.
Thank you, Peter. On behalf of Anand Rathi Share and Stock Brokers, I welcome everyone to the Q4 FY22 and full year FY22 earnings call for J. Kumar Infraprojects Limited. From the management side, we have Mr. Dr. Nalin J. Gupta, Managing Director, Mr. Madan Biyani, Chief Financial Officer, and Mr. Arvind Gupta, VP Taxation. We will start with the opening remarks from the management regarding the industry, the result, and post which we will open up for an interactive Q&A. Over to you, sir.
Good afternoon, everyone. On behalf of J. Kumar Infraprojects, I welcome everyone to the Q4 and FY22 earnings conference call of the company. Joining me on this call is Mr. Madan Biyani, CFO, Mr. Arvind Gupta, Vice President Taxation, and our IR team. I hope everyone has had an opportunity to look at our results. The presentation and press release have been uploaded on the stock exchanges and our company's website. Before I share the company's financials and operational performance, I would like to introduce Mr. Madan Biyani, company's new CFO, who has joined us recently. Mr. Biyani is a chartered accountant with an overall experience of around 23 years in various verticals of infrastructure development, such as roads and highways, metro rail transport system, greenfield airports, and others. We are glad to announce that we have surpassed pre-COVID levels in terms of operating activities and on track to achieve the targeted growth. Despite the unprecedented headwinds due to geopolitical uncertainties, rising commodity and logistics costs, JKIL has delivered a noteworthy performance on various fronts, including record revenue, order inflows, notable decline in gross debt, and improved profitability. We were able to garner new orders worth 3,685 crores in FY22. We believe the order award will intensify further in FY23. Our robust execution capabilities, coupled with strong repository of asset base enabling efficient execution, reflected in strong revenue growth. Our healthy order book of 11,936 crores ensures substantial growth momentum. The current financial year, that is FY 2023, has also started on a positive note. We have been able to garner project from IRCON amounting to 1068 crores excluding GST. Other key updates: 3 prestigious projects of national importance were inaugurated in the month of April 2022, which includes Metro Line 2A, which is from Dahisar to DN Nagar on the west side, wherein there are 17 proposed stations. 9 stations are operational between Dahisar to Dhanukarwadi, and which has been entirely constructed by JKIL. Metro Line 7A, which is again Dahisar East to Andheri East, which is on the eastern side, that is on the Western Express Highway, which comprises of 13 proposed stations with the along with the elevated viaduct, out of which 9 stations has been put to operations, wherein 5 stations including the viaduct has been constructed by JKIL and are operational between RA to Dahisar. JNPT, and the third project that we have inaugurated is JNPT port connectivity between Amra Marg starting from NMMC headquarters, that is Navi Mumbai Municipal Headquarters, between building to Gawan Fata, Jasai to Karal, and Karal to D Point Panvel and Kalamboli, which is a 35-kilometer stretch, has operational for public on 3rd of April by the Honorable Minister of National Highway. The tunneling work of Mumbai Metro Line 3 and package 5 and that is package 5 and 6 from Dharavi to International Airport is also completed. The Board of Directors have recommended a dividend of 60%, that is 3 rupees per equity share on the face value of rupees 5 per equity share, subject to approval of shareholders in the AGM. Standalone performance highlights for Q4 FY22. Revenue from operations for Q4 FY22 grew by 12% to 1114 crores as compared to 992 crores in Q4 FY21. EBITDA for Q4 FY22 stood at 159 crore as compared to 104 crore in Q4 FY21. EBITDA margin for Q4 FY22 stood at 14.3% as compared to 10.5% in Q4 FY21. PBT for Q4 FY22 grew by 133% to 103 crore as compared to 44 crore in Q4 FY21. PBT margin for Q4 FY22 stood at 9.3% as compared to 4.5% in Q4 FY21. PAT for the quarter 4 of FY22 grew by 126% to 76 crore as compared to 33 crore in Q4 FY21. PAT margin for Q4 FY22 stood at 6.6% as compared to 3.3% in Q4 FY21. Standalone performance highlights for the FY22. Revenue from operations for FY22 grew by 37% to 3,527 crore as compared to 2,571 crore in FY21. EBITDA for FY22 stood at 505 crores as compared to 311 crore in FY21. EBITDA margin for FY22 stood at 14.3% as compared to 12.1% in FY21. PBT for FY22 grew by 219% to 283 crore as compared to 89 crore in financial year 21. PBT margin for financial year 22 stood at 8% as compared to 3.4% in FY21. PAT for FY22 grew by 222% to 206 crore as compared to 64 crore in FY21. PAT margin for FY22 stood at 5.8% as compared to 2.5% in FY21. The company continues its focus on working capital management and quality of order book. The company has been able to reduce its debt levels substantially despite challenging external environments. We remain optimistic on India's recovery amidst the continuing global geopolitical uncertainty. Before taking the Q&A, I would like to reiterate the vision of the company. Our target is to achieve a revenue of 5,000 crore by FY25. Although we have comfortable debt position, our endeavor is to reduce gross debt every year with the best possible efforts. Objective is to continuously improve stakeholders' return ratio, ROE and ROCE by investing in people, technology, and processes. With this, I rest my point. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Shravan Shah with Dolat Capital. Please go ahead.
Thank you, and first of all, congratulations to the entire team for robust performance for the quarter and for the year. Sir, my first question is, are we now upgrading our revenue guidance for FY23? Because last time we said 12 to 15%. But as I see, I think we can easily do 20-25% growth this year. And the number you are looking at 5,000 crore revenue, I think 1 year before we can achieve by FY25 we are targeting, I think FY24 we can achieve. So just wanted your update on that.
Well, Shravan, as you see that the company has achieved a top line of 3527 crore, which is a quite robust top line growth that the company has shown. Our endeavor is to try and do the best possible, and we expect that around 12 to 15 is always what we are expecting to grow at, and further we'll put our best efforts and try to achieve as fast as possible the maximum revenue. But our main focus always is ensuring the bottom lines, which is very, very important for the company. More than top line, bottom lines are always very, very important for the company. So growing top line without bottom line is never our focus. So we are very particular in selecting our projects, and which gives us proper margins. So and that's how we have been able to, I think, among the peers, we stand at a very good position in terms of even the debt equity ratio. And you know that we have reduced the debts by 100 crore. So I think selecting the right project is most important. So for the health of the company, and that is really our focus. Nevertheless, we will try our best to achieve the highest top lines. Thank you.
I understand and completely agree with you in terms of the growing the bottom line along with the top line. But still, just doing a rough calculation, so we have a 11,900 crore order book. So even if we do at least 2.5 to 3 years would be the execution period. So 35% to 38% kind of, even if we do, then also it is 20-25% comes the growth for this year. So just trying to understand what stops us to increase the revenue guidance.
Well, Shravan, I would again like to highlight that the organization, we at J. Kumar, we are a specialized company working into urban infrastructure. When you are working in urban infra, there are a lot of limitations in terms of land acquisitions. There are issues with regards to utilities. So even though the projects are ranging for around 2.5 to 3 years gestation period, but actually when you looking at the urban infra limitations, where there are so much of PAP to be handled, utilities to be handled, which is not even known to the department themselves. So looking at it, the actual execution of the project spills over to 3+ years. So if you look at the growth, targeting around 12 to 15% would be a realistic picture, and we believe that what we speak, we do better than that. So we would not like to give a very unrealistic thing. And when you are working in urban infra, there are limitations in terms of execution, but at the same time, the margins are better. So that's how we would like to explain the point.
Okay. And second, sir, we have already got 1,068 crore order inflow. So now for the full year, how much more we targeting? And in terms of the EBITDA margin, so previously we said 14-15%. So is there any change, or are we try to have a slightly achieve the upper end, that is the 15% kind of EBITDA margin?
So, well, if you look at that we are targeting works close to around 5,000 crores for FY23, out of which are close to around 20% has already been achieved in the Q1. And looking at the strong pipeline of the order book, which is close to around 20,000 crores, we expect even with a 25% strike rate, we shall be comfortable to achieve the top line of 5,000 crores. And EBITDA margin, we will surely be maintaining of 14 to 15 that we have been which is the main focus of the organization, and we are sure to maintain it because we like to go at a slow pace, but we back the orders at our margin. Even if you look at the situation of FY22, the order book that came in from Q4 was more than 55 to 60%. So we always want to select the project which are right for the company, which are giving proper bottom lines to the company. That is the main focus of booking an order book, and looking at the ample amount of works that the government is focusing on infra projects. I think bagging an order of 5,000 crores should not be an issue, and at our margins of 14 to 15%.
Okay. And in terms of the capex number, how much do we want to spend this year?
So close to around 100 to 115 crores is what we are expecting in terms of capex. last year we have done around 115 crores. And current year also we expect close to around 100 crores of capex to happen.
Okay. And in terms of the, you already mentioned in terms of the, we'll try to reduce the debt and the working capital. So working capital, so currently 70 odd days. So can we see further improvement in the working capital days?
So working capital as on today is 120 days, which I think is a realistic number. Though we will, of course, we put our best efforts to see how we can bring it down. But as of today, it is 120, and we shall not be going over it is what we expect. And with regards to your second point was
debt, gross debt.
Debt. So debt, if you look at net level, we are already negative net debt terms to the tune of around 78 crores. And at gross level, we are at 0.21. So I think already this company, we are almost a debt-free company. And though we will, of course, keep on trying and our best efforts to even further lower it. But most importantly, what's important to be understood is that even with the growth of around 37% in top line, the debt has decreased. We haven't increased it. So that shows the financial discipline of the organization at J. Kumar, and we'll put our best efforts going forward as well.
Lastly, sir, I need a number for mobilization advance, retention money, and revenue as on March.
Give me a moment, please.
Yeah.
So,
FDR is 376 crore is FDR. Security deposit retention money is 212 crore. And cash and bank balance is near about 136 crore, 33 crore.
Okay. Sir, what was the mobilization advance, sir?
Unbilled revenue is 300.
Mobilization advance.
550 crore is a mobilization advance.
Okay.
546 crore.
546.
Yeah, it is an unbilled revenue.
Yeah, 546. And retention, you said 212 crore.
Well, right.
Okay. And anything, sir, you said that the 20,000 crore opportunity in terms of the bid pipeline, anything which you want to highlight? Because last time we said in terms of the Chennai, some projects likely to be awarded by this June. So any update or have we bidded and where we are expecting results to come?
So, firstly, we are in process of bidding for metro projects all over the country. Close to around, I will give you a broader gist. So, metro would be around 6,000 crores that we are targeting. STPs and water projects to the tune of around 3,000 crores. Flyovers and roads to the tune of around 5,000 to 6,000 crores. Buildings and hospitals to the tune of again 5,000 to 5,500 crores. Again, we have also submitted an RFQ for two projects of 3,000 crores each, that is 6,000 crores for GMLR, which is for Bombay Municipal Corporation. And we expect the financial bids to be submitted very soon in this, the first half. And we expect some orders to coming in from that sector as well. And metro projects has been going on all around the city, all around the country, I would say. And we would see that around 55% to 60% of order book and revenue comes in from metro sector, where the government is focusing in a very big way because looking at the tourism attraction or the growth of the country, urban infrastructure is the most important factor to be focused, and the government is looking into it, and which can be seen from the robust budget for infra that has come up. So we are very confident that we should be able to back this order.
Yeah. Sir, this 3,000 crore BMC two projects, this is for which, what's the scope of the project?
It is a tunneling project of 14-meter dia connecting Goregaon on the east side of the Western Express Highway to Mulund. So that's crossing along the JBLR, you can say. And this will be a connectivity which will be parallel to JBLR.
Okay.
Tunnel. It's a road tunnel that will be by TBM.
Okay. Sir, thank you and all the best.
Thank you. Our next question is from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good afternoon, sir, and congratulations on really good numbers. Sir, just wanted to understand with this metal prices now coming down, what could be how could the margins look like in near to medium term? What could be potential upside from the current levels?
So Alok, I would like to mention that as we have always been saying, that the contract is covered by price variation and escalation clauses. So it works either way. If there is an increase, it gives us the cover for the higher side, as well as if it is reduced, it takes care of the reduction. So it's not going to affect the margins inside of plus or minus. So I would say we will be able to maintain the margins for sure. So it's basically a fair escalation clause which takes care of the actual increase and decrease in prices. So it won't affect the bottom lines.
Sure, got it. And also, sir, there are these lot of projects coming from the NHAI side, and the competition is also expected to reduce now. So are we looking at those projects, because currently they form a very small portion? We have been primarily focused on the metro side. So since we also have a very decent experience in the road side, so any focus there on the NHAI orders going forward?
So if you look at this 1100 crore job, this is a job of NHAI only. And so our endeavor is to look at projects which gives us good margins and which has cash flow, strong cash flows, like, the budget is well allocated to the project. So NH has been, we have been working since a good couple of years into that sector. Let it be JNPT, let it be Dwarka Expressway. We have been working continuously into NHAI, and the recent order book is also for the NHAI project through IRCON. So our focus will always be there to look into various sectors, not limited to metros or flyover, though it will be our primary focus. But we are open to all sectors, including building works, where we are doing a decent amount of work even there. So, and we have taken up river rejuvenation projects. We are looking at STPs. We are looking at water pipeline projects. So our focus will be as a open-minded, but primary focus would be for NH and metros.
Sure. And also, sir, our order book is nearly 12,000 crore now, which was at similar level what it was 2 years back. And now, in terms of revenues, will be growing pretty well, nearly 5,000 crore maybe next year or so. So I just wanted to understand how many orders we are looking to take in this year. I mean, is there any thought process as to how much maximum we are looking to bag? Because if opportunities come by, we may even exceed our whatever internal target might be.
So see, I would say that we are comfortable from around 15 to 20,000 crores worth projects also to be taken up with the present infrastructure of J. Kumar, and with the strong image of J. Kumar in terms of handling complex projects, technical expertise that the company holds for more than 4 decades. I think bagging orders and handling from 15 to 20,000 crores should not be an issue. But as mentioned that for us, being a financially disciplined organization that we try to maintain, we are looking at 5,000 crores projects for sure. And even if we get good opportunities and if we bag 10,000 crores, we are open to it. But we don't want to be an early bird and bag orders without bottom lines. So that's how we are targeting at a project, a comfortable order inflow of 5,000 crores.
Got it, sir. And so just also wanted to get your sense on the competitive intensity on the metro side, because we hear that, in road projects we see, especially on the EPC side, there is a lot of competition. How is it, sir, in the metro side? If you could just indicate as to how is the intensity there on in the metro projects.
So the intensity and competition is there in all the sectors. But if you talk about metro, it's when you talk of elevated and underground metros, the ticket size has been substantially increasing over the years. And now the metros are coming up with a project size of 1,000 crores, 500 plus for that matter. So I think handling such type of big magnitude and complex projects, there are very few capable infra companies available in India who can take up such type of huge, laborious as well as technically complex jobs. So although there is a competition, but the amount of works available in the market is so huge that there are some local players who likes to work only in particular vicinities. But for us at J. Kumar, we have been working pan-India and with Maharashtra, Gujarat, Delhi as being our main focus. And also recently we have been trying to bid for projects in Chennai. So I think competition is there, but it's a sensible competition, I would say. So that's the difference between roads and metro sectors and flyovers, I would say.
Got it. Got it. So just last question. Out of the order book which we have currently, how many projects would be maybe a little slow moving, and how many have not started? Basically, how much is currently under execution? Just wanted to know that.
I would say that other than the projects that we have recently backed in Q4, that is March, to the tune of around 2,200 crores, 2,500 to 3,000 crore projects which has been recently backed are under slow moving for that matter, if you speak, because it is the initial stage of the project and the preliminary works that takes the initial 6 to 8 months is the point. So I should not actually really call it as a slow moving, but in terms of revenue, we can see the inflows coming in FY23 in the current year.
Got it, sir. Got it. Thank you and all the best, sir. Thank you.
Thank you very much, Alok.
Thank you. Our next question is from the line of Kumar from DAM Capital. Please go ahead.
Good afternoon, sir, and congratulations on a good set of numbers, especially for the fiscal year FY22. I think you made all the guidance which you gave in the beginning of the year. Sir, my first question, can you please confirm the revenue guidance and EBITDA margin? Is it 12 to 15% growth over FY22 and 14% margin for 40% margin? Is that fair assumption?
Yeah, so 14 to 15% EBITDA margin and around 12 to 15% growth is, I would say, a very achievable target for J. Kumar, and we have been maintaining it for these many years. And we are confident that we'll be able to achieve it, Mohit.
Sir, what was the impact of the input inflation in the Q4 FY22? If you can, was there any price variation which could not be, completely passed through, and there was a hit, but since we have better revenue, we have been able to cover it? My question is, if there was no input inflation, sharp input inflation, what could have been the margin?
Means inflation, as we have said, that the price variation and escalation clause takes care of it in a fair manner. And even when the prices increased, it did not impact, and even now going down also, it's not going to affect the bottom lines of the company. And
I understand.
Material work, if you talk of, it depends upon the nature of work, where the material component, if you look at it, keeps varying from 63 to 65%. And when the works, it totally depends, this percentage totally depends on two factors. That is at what stage of the project, at what stage the project is. And second is, what is the nature of work? If the work is more of mechanical means, the material component would be reduced. And if it is more of material component, then you will see an upside in it. So, but at the on a year-on-year basis, if you look at it, 63 to 65% is a fair number to be targeted.
On the order pipeline, what are the orders apart from GMLR which is available in the Mumbai region, Maharashtra?
So that RFQs has already been submitted by the qualified bidders, and now it is under evaluation stage with the BMC, and we expect that very soon we should be able to get the result of the RFQ submitted by the bidders, and eventually in this financial year, this work should be put into operation.
No, sir, apart from GMLR, which are the other large projects which are there for this fiscal, which we are targeting?
So there are metro projects in Surat, Chennai, in Ahmedabad that's coming up. Again, Delhi is coming up with other metro projects. Mumbai is coming up with project of Mumbai Metro Line 10, 11, 12 and 13. So I think metro projects has been there as in widely open range. Even Kanpur and Agra, they have been coming up with new projects. So metros and flyovers and NH jobs are amply available all across the country, and we have been focusing mainly into northwest region and into the south area also, like Chennai more prominently. That's been our focus, that we open up our regional office in Chennai as well.
So are we targeting any more subcontracting, like say from IRCON, which you won this quarter? Are we targeting more projects like that? Is there a sufficient large opportunity available?
So if you look at this project of IRCON, it's I don't know whether you should really call it as a subcontract, because the job that was being called by NH was on PPP model, and J. Kumar was interested more into EPC, as we always say. So this is IRCON being a government undertaking. We have taken the job from them on a EPC mode, and the earlier bid called by NH was on PPP mode. So that's the difference. So I would not really call it as a subcontract. And our main focus always, as you have been seeing with the entire order book of 12,000 crore, it's always been from the government directly as a main contractor. And this also here will be as a main contractor and not subcontractor basically.
And are the price variation clauses?
IRCON as the developer and we as the EPC contractor.
And do we have a similar contract as NHAI with the IRCON?
I'm sorry?
So price variation clauses is also present in IRCON, right?
Part of this IRCON contract as well.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you very much.
Thank you. Our next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Congratulations.
Good afternoon, Jiten.
So my first question is on the execution. So order backlog is significant.
Can you be a little louder, Jiten?
Yeah. Okay. So my question is on the execution in FY23. So which project we are likely to close in FY23, because we can see metro projects can achieve completion this year, many of the metro projects. So any targeted revenue breakup from metro, then obviously roads and buildings. So can you just give us a breakup, and which bigger projects are likely to complete this year?
I would say that we expect a top line of around 55% from metro and balance 45% from other works. And in terms of completion, like last year, we have last year or early Q1, we can say we have completed line 2A and 7 phase 1. And the phase 2 of line 2A and 7 will also be completed in this H1. As well as we expect the Pune elevated corridor that we have been constructing, that's also been completed from our side, and by H1 we will hand over the Pune elevated project also to the department. So these three projects we see in terms of completion. And with regards to revenue, giving the project-wise would be a little difficult at this stage. But yes, around 55% would be from metro and 45% from roads, bridges and other sectors.
So this line 3 of underground metro, do we expect this to complete? Because I can see almost 1,000 crore of order backlog still outstanding. And we recently saw an article where it was mentioned that the work is getting extended or delayed to December 24. So we were targeting around this year end. So are we on track, or it will get delayed?
So what we have been reading in the articles is basically with regards to operation of the metro project and not execution of the underground metro projects that's been backed by J. Kumar. So our projects are well within the limits, and the projects are going on well in time, and we have completed projects to the tune of around 75 to 80%. And the balance work will also be completed within the targeted time. It's basically regarding the depot work that we have been mentioning, because till now it has not been very clear as to where this depot is going to be constructed. So irrespective of the depot work, the work assigned to J. Kumar in terms of top line and bottom line is very secure, because that is irrespective of the depot location, our works will be completed.
Okay, so we will be 100% complete and we'll get our money from this issue.
So being a cash contract, we are not connected with the operation of the line. Construction work, whatever has been assigned to us is important, unlike a PPP or BOT project. So that's the best part of it, and that's why J. Kumar always focuses on to EPC projects.
Right, sir. So, one last thing on the highway project. So, I believe we are obviously focusing on the asset-light business only, but are we looking for any HAM projects or a kind of a back-to-back subcontracting for HAM projects? Like as you said, we are doing something for IRCON. So, any tie-up with them for a future back-to-back subcontracting for HAM projects? Are we looking for such projects?
So HAM, we had tried for it. We had bidded one project also, which we found to be lucrative. But as means we could not bag it, because for us execution, I believe, is the biggest strength, and we would like to focus onto our EPC mode itself. And though we keep trying for different options, if we feel that it can give us a different vertical, but surely at our margins and at our terms and conditions, if we are comfortable, we try for it. But it's very unlikely that we'll go for any BOT or HAM projects.
Sir, on the margin front, again, I understand you've given a guidance of 14% based on the current commodity situation. But sir, what we have won, any projects which we have won recently in last 3 to 6 months, probably we shall be starting the execution in Q2 and or Q3. So do you see better margins from these projects as against older projects which is in your order backlog and which are under execution right now, which can give you, say, 12% margin because of the commodity price, and while the newer projects which you have won in last 3 to 6 months, it can give you 16%, and while your blended margin is 14%. But going forward, if you are able to win new projects, do you see in FY23 second half and FY24 onwards, our margin run rate spiking up to 14 to 16%, which we have seen in the past also? Any thoughts or any light on this, sir?
Well, Jiten, I would say that it's not a printed percentage that it would be the same. But I always believe that means there are projects which gives you lower margins. Some projects, as you rightly said, which gives you 17-18% margin as well. But at the same time, if you talk on a year-on-year basis and at an average margin, 14 to 15 is a decent margin, I would say, which would be which can be achieved. And though our endeavor always, as we mentioned, that we try to do the best in terms of cost cuttings, in terms of management of idling, but we need to always remember that working in urban infra, which gives you a very specific margin of such good numbers that we maintain, also attracts problems with respect to delays, cost overruns. So looking at the increase and decrease on an average level, maintaining this margin, I think, is a decent margin to be there as I see.
We appreciate that the margins are really good. I was just taking an insight because now we are doing some STP work also, and some if you are able to do some different geography or different work in different geography, that can have a impact on the margin. But overall 14-15%, I understand we can easily maintain based on the existing order backlog, sir.
With the orders of existing order books that we have bagged of around 12,000 crore, I would say that we will be able to maintain the margins. And of course, little bit some basis point plus or minus is always there. But I don't see any substantial increase in the margin, to be honest.
They were on said that we are targeting
Mr. Rushi,
to be a 5,000.
Sorry to interrupt.
Sure.
If you have more questions, please join the queue.
Thank you. Thanks a lot, sir. Thank you, sir, and all the best for the new financial year. Thanks a lot.
Thank you. Our next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Yeah, hi. Good afternoon, sir.
Hi, Parvez. Good afternoon.
Yeah, hi. Good afternoon, Arunji. So 2 questions from my side. First, if you could let us know about update of some of our major projects like the coastal road in Sidco, the Methi River package that we are doing, the Dwarka Expressway, and the Surat Metro project.
So with respect to the coastal road project, it is recently bagged, and the preliminary works are ongoing. So, but we should surely see revenue coming in FY23 for the said project. Mithi Tunnel, we have already started the work, and we have received payments worth around top line close to 30 to 40 crores. So the work is well in swing, and the TBM assembly is already going on. The shaft is nearly completed. So we should be starting with the lowering of TBM in the month of June or July.
Sir, and about the Surat Metro and Dwarka Express?
So Dwarka Expressway, you can see that there is a good revenue that has been received from Dwarka Expressway to the tune of close to around 800 crores in FY22. So the work is in full swing, in line with the timelines. So I don't see any issues with regards to Dwarka Expressway. It's in full swing. And which was the other one you were asking me for? Surat Metro. So Surat Metro also, we have received payments. The work has recently been started because there were some land acquisition issues and change in alignments by the local authorities there. So, but now we have already mobilized in a proper way, and work is in proper swing. And in this financial year itself, we expect to lower the TBM into the shaft. The TBMs have already been refurbished at Surat, and some minor works are pending. So the launching shaft should be ready somewhere around December or Jan. So in this financial year, we should be able to lower the tunnel boring machines as well there. We have already started casting of tunnel segments also in Surat, and the station D walls have already are already in proper line, and there are 3 machines which are already operational for that job.
Sure. And one bookkeeping question for Arvind. What is the total cash and bank balance and the FDR?
FDR is 376 crore, and cash and bank balance is near about 133 crores.
Sorry, FDR you said is 376 crore.
376 crore is FDR.
Oh, okay. And cash and bank balance is 130.
Yeah.
Oh, sure. Thanks. That's it from my side, Nalinji, and all the best for future.
Thank you, Parvez.
Thank you. Our next question is from the line of Panjul Agarwal from Green Portfolio. Please go ahead.
Hello, good afternoon, sir. Sir, I wanted to ask that there have been very frequent changes in KMB in last 2 years. Like there have been resignation of 2 independent directors as well as the CFO. Would you like to comment on that?
Yeah. So Anjul, basically our earlier appointed CFO. Firstly, I would like to emphasize on the point that Arvind Gupta, who was the CFO, he has not left the company. He's very much with the organization. But looking at the growth of the company and diversified order books as well as the better governance that we wanted, we have given him a separate portfolio with regards to taxation. An additional person, Mr. Bhandari, had joined, but due to some personal issues that he had with his previous companies, he was not able to be regular into the office. So that's how, as it was the initial period, we thought it more better to appoint a new CFO and a competent person on as a replacement to it without being waiting for his return with his earlier commitments. So that's how it's the reshuffling is there, and Arvind is already there in the company. And with regards to the independent director, when you talk of Mr. Srinivasan, so looking at his age, because he has become substantially older in age, so looking at his health conditions, we got Mr. Kapoor, who is a very competent person and having a quite large experience into the infra sector as well, because he had been working in GVK as well into airport sectors and into GMR, I'm sorry. So looking at that aspect, we thought it to be a better deal to take a more younger person as compared to Mr. Srinivasan. So I think that was a good move, I think, which well thought process which we have taken this decision.
All right. So my next question is regarding capital WIP. It has remained almost same at 150 crores. So is there a project stuck, or can we expect to capitalize this?
Yeah, of course, we'll be capitalizing a decent sum in the current year, and the J. Kumar house itself will get capitalized in the current year as registration formalities have been done in the current year.
Okay. Sir, apart from this, receivables have grown by more than 40%. Can we have some information on that, the quality and the age of debtors?
Yeah, so basically it was been for March month, the billing always is stronger in Q4, which is the highest revenue that comes in Q4. And out of this, a substantial amount is already been received by the company in April and May. So that's the simple reason which was there. And there is no any slow moving or any doubtful inflow into that.
Okay. Okay. Thank you, sir.
Thank you, Anjul.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star 1 on your telephone keypad. Our next question is from the line of Parikshit Kanpal with HDFC Securities. Please go ahead.
Hi, Nalinji. Congratulations on a very great year, sir. And really good improvement in the balance sheet health and reduction in debt. So my first question is on the Mumbai Metro project. So what is the pipeline right now in the upcoming? Is there any upcoming packages, any new metro projects being planned for MMR?
So in MMR, there are Metro Line 10, 11, 12, and 13. 4 metro lines that has been that are well into pipeline, and I think mainly the first project that should hit the inflow should be Metro Line 10, which is connecting Metro Line 4 and Metro Line 9. That is from Thane to Gaimukh, which is on the Thana Ghodbunder Road, to Dahisar. So this line, which is costing close to around 1,200 crores to 1,500 crores, should be coming up very soon, because the GC has also been, the tender for GC has also been opened. So this line I see very fast to come up in MMR. And also the other projects, that's extension of Metro Line 5 and 11 and 12, which goes till BPT dock. That line is also under planning stage, into tendering stage.
Okay. My question is more because, sir, it seems like large projects like Coastal Road, Trans Harbour Link, larger metro projects, flyovers, a lot of it, like only I think GMLR is left to be awarded. Rest all the major projects have been awarded. So from your bidding perspective, from MMR, which is like 70 to 80% of their overall order book, so how do we factor in the order inflows pipeline? Because otherwise you need to diversify beyond MMR into other geographies, ramp up Delhi or UP or Gujarat or Chennai. So someone has to, like, for making that balance, so reduction in order inflows likely to happen from MMR. So how do we need to balance it? So just wanted to understand that.
So Parikshit, as you are aware that J. Kumar, we have not been a Maharashtra-focused company. It's basically focused on the projects that we believe to be good for the organization. So if you look at till 2010, we were mainly focused into Maharashtra. But in the past 12 years, we have become a pan-India company, and Delhi, Gujarat, Rajasthan, UP, these areas have also been, so our band has been becoming more broader. And like recently, we bagged the order from Delhi Metro for 600 crores. So our focus is always there on a pan-India basis, looking at projects where we feel that projects are good with terms of cash flow, with terms of margins. So that's the only focus that we go for. And right now also there are projects of Delhi Sena Bhavan for building this Satara Medical College, Satara Sainik School, Pune Administrative Building, hospital in Goregaon by BMC. With regards to this is totaling to around 5,000 crores worth of projects in building line. Whether you talk of expressway from Sirsat to Akoli, that is flyover and road, your coastal road from Dahisar to Bahender West, which is a 1,500 crore job. That's on EPC mode that's coming up, and the tendering work is in process. The NIT has already been published. There is a 4-laning of bridge in Raigad. There is Nariman Point to Cuff Parade Sea Bridge has been proposed of around 300 crores. There are bridges in Mumbai close to around 1700 crores that's coming up. There is Chennai Underground Metro projects totaling around 6,000 crores. There are 6 packages altogether where the tendering process is on. There is a sewerage tunnel project close to around 500 crores that we have recently submitted, and we are very likely that we should be able to hit the project, looking at the complex nature of work and the expertise of J. Kumar. And again, there are some powerhouses and water and STP projects in Uttarakhand as well that we have been targeting. So 20,000 crores worth of project as of now, which is at the early stage of FY23, we are talking of. So, even at 20-25% strike rate, we should be able to back the order book that we target for.
Great, sir. I think thanks for elaborating that. The second question is, sir, the guidance which we have given in like 5,000 crores revenue guidance in midterm. So for achieving that, we need to substantially ramp up our order inflows. So at least we need to do that 8 to 10,000 crores of inflows, at least from 2 years from here. So are we well placed to get those kind of inflows? I mean, in terms of building up skills, expertise, competencies, geographical diversification, because at 5,000 rate for having 15,000 crores, we should at least have 15 to 18,000 crores of order backlog. So that will require at least 8 to 10,000 crores of inflows.
Well, Parikshit, I will take your point, and I appreciate what you are saying, fairly right. So, and we are well prepared, as we said, that we like to give a number which is like more, on the safer side. But yes, we are open to bagging orders close to 10,000 crores also. And as like our organization to handle projects worth around 15 to 20,000 crore, we are well geared up, and with the reputation of the company, the technical skills, the wonderful team at J. Kumar that we have, and the ownership attitude at J. Kumar, there are, like, I think bagging and executing such projects wouldn't be an issue. But as we always say, that margins, which is our main focus, like, you become too big, but you lose your bottom lines. That we don't want to happen. So that's how we like to be very selective, though we may be sounding little low or little pessimistic, but our focus in terms of margin is always the primary area. So that's how we have been giving a guidance close to around 5,000 crore. But we are open to bag orders from 8 to 10,000 crore without any discomfort.
Okay. There's one more, sir.
Balance sheet, of course, of J. Kumar that you can see.
Right. So just on the building segment, sir, now it is 8% of the order book. So first of all, how much inflows we had in building segment in FY22, and how are we looking to make this segment bigger and meaningful to the overall execution and order book? Because the revenue contribution is hardly about 5% from this segment. So if you can, I know you spoke about 5,000 crores of building prospects, but as the seriousness and intensity of ramping up this vertical, which has a huge potential and there is a huge shortage of contractors in the EPC building segment. So if you can just touch upon this segment and elaborate on a standalone basis, how much are we qualified to bid for government projects on a building side, and potentially how much of order inflows, and going ahead, what could be the potential contribution of this segment? Can it become like 20%, 18 to 20% of the order book in the next 3 years?
So, Parikshit, with regards to potential, I already mentioned you that out of the 20,000 crore, around 5,000 crore of building projects, we have already mentioned that. And we at J. Kumar, we have been qualified with a single certificate of close to 1,000 crore plus certificate that has come up through Alwar. And recently we have been doing building works at Lucknow as well. So, building works, we have a substantially good certificate where we can take up these type of jobs. But building, we look for an opportunity of the right work at the right place and at margins that we need. So building has been a focus, and that's how from the last couple of years we have started looking into building works as well. And we'll continue to do that. And we'll try the best to explore this opportunity to the best as possible, where the company is comfortable into.
Okay, sir, just last thing, if Arvind or Mr. Biani can answer it, or you can answer. So there been any big inflows of the mobilization advance towards the end of March? Because the current liabilities look to be a little on a higher side. So, is there any one-offs there, like a big chunk coming in the fourth quarter?
As of March 31st, we have total mobilization advance of 547 crores. And we expect further 300 crores to receive for the newer projects later on. And in the quarter of March, the Q4 March, we had received 59 crores from Surat Metro as mobilization advance.
What was this number in December 21, the mobilization advance in December 21, closing balance?
December 21.
December 21, just give me a second.
Do you have that?
Okay, maybe you can answer it later. No problem, sir. Thank you, sir, and wish you all the best. Thank you.
250 crore as on March 21.
How much, sir?
December it was almost same. As of March 21, it was 450 crores, which was 1 year before. December it was almost same. We'll share the numbers with you later on.
Okay, sir. Sure. Thank you, sir. Those were my questions. Thank you.
Thank you. Ladies and gentlemen, if you would like to ask a question, then please press star 1 on your telephone keypad. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
I would like to thank once again to all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our CFO or IR team for any clarifications or feedback. Thanking you and assuring you of our best efforts at all times. Thank you very much.
Thank you, sir.
Thank you. On behalf of Anand Rathi Share and Stock Brokers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.